This is the closing market report for Friday on the Iowa Agribusiness Radio Network. I'm Riley Smith. On the phone right now with Bill Moore of Price Futures Group as we wrap up another day in the ag marketplace. Bill, what have we seen going on in the grain and livestock markets today?
Not a lot. It's kind of chopping around after yesterday's frenetic activity. A little bit of a correction into the 3-day weekend, but not a lot. Actually, the corn's up up a cent or two. It's up a cent right now. Beans are only down 2. They were down at one time 14. Pretty good comeback. The wheat is down about 4 in the middle of its range. The biggest thing is the weekend. It's a holiday weekend. It's a President's Day weekend, of course, in the U.S. That means that we close today at 1:20 in about 19 minutes, and then we don't reopen until Monday night at 7 p.m. So something to keep in mind for President's Day. But also, China is on holiday. China has their Lunar New Year. They'll be off all next week. There could be some light buying from them next week. And South America's got Carnival. So it's a weekend when it seems like the whole world's taken off for a long weekend, and so we'll see what happens with that. But other than that, the big news this week was what appeared in the paper, the Chinese newspaper. It's called the South China Morning Post, a day or so back, that said that when U.S. and President Xi meet in Beijing in early April, that they're going to maybe firm up a new trade deal for the next. So it's one thing for Trump to post on his Truth Social good things about exports, but when it comes from China, that turns some heads. And the market ran with that yesterday with big rallies across the board. Wheat rallied just because it's oversold, and there's a big short open interest in wheat that they were covering, and some coldness in Russia, some ice issues. Maybe he's going to impact the Russian crop. So big update yesterday, and the market just kind of catching its breath today. It's an interesting dynamic. China buying our beans when they're so much cheaper from South America. Why would that happen? Well, they said the same thing in late October, but it happened. They lowered some tariffs between the two countries, and China ended up buying 12 million metric tons of our beans by the early January of this year. You know, it's got some teeth to it when they talk about that, and when Trump talks about that, and sure could happen again. They might have to lower some tariffs again, but that sure could happen, even though South America is a lot cheaper, and even though China's bought a lot already. And keep in mind, too, the big factor here, swing factor, in my mind, is it's the political angle. It's an election year, midterms in November. President Trump is behind in the polls. He's going to do everything he possibly can to help the farmer. He needs the farm vote, like he had, last time when he won, and that could sure help grease the path for good trade relations, less tariffs, more exports going forward in 2026. So something to keep in mind. Other than that, the only news would be market just waiting to see all this rhetoric about it increased export from China comes to fruition, and we can start to see some sales next week or the week after. So the market will be kind of waiting on that. The exports that came out yesterday were pretty poor in the beans, 281,000 metric tons, looking for 300 to 1.17 million. Corn came out 2.07 million metric tons, a gigantic number over the range they were looking for. Corn exports just week in and week out routinely have been massive and supporting the market. Other than that, the weather in South America is a little too wet. Some of the some mold issues with the harvest. Some of the yields not kind of disappointing for South America. So we'll see if the record crop comes to fruition. I know the CONAB made the estimates earlier this week of Brazil. They had them only at 178. Now, a lot of our estimators here in this country, the big companies, have got the Brazilian bean harvested 180, 180, 182. So we'll see if it comes out as big as a lot of people think. Maybe not. So that's a factor. And so going forward, two big things to look at: how the South American crop is faring and the early harvest coming on. What's going to final number be? Will it be 182 or 183, or more like 177, 178? We'll find out. That's been curbing the rallies, and underneath the support it comes from the exports particularly strong in corn. Good example again was yesterday's sales, over 2 million metric tons, just a huge number for a week. So those are the two things in keeping the markets active, going into next week for the grains. Livestock wise, it's been a tale of two cities. Cattle market, I think, is having a good day. Last time I checked, it's closed by now. It ended up unchanged. It did a lot of roaming around. At one time, the market was up $1. It ended up closing unchanged. The hog market was down 50 cents. If you look at the chart of April cattle, the front month now, what you'll see is a market that has rallied hard since late November. It's come up $30 to $35, and it's holding the top of that range into the month of February. Again, the fundamentals are really exemplary in cattle. The numbers are down. The cattle herd, as we know, is at a 75-year low. Hard to believe. The meat stocks off the cold storage report last week showed the lowest level in 2009. The exports are good. Cash is strong. Cattle is going to keep going higher. I think people like their steaks and their burgers, and I think cattle market continues to move higher. And even though the hog market has had a pretty good break here in the last 2 weeks, I think meat prices will pull pork prices up. Both of them going higher through the end of this month.
All right, Bill, lots of great information today. For anyone who'd like to get in touch for more marketing information and check out your newsletter, how can they do that?
630-947-5176. wmoore@pricegroup.com. Check out my newsletter, Agmaster, or www.pricegroup.com, the company website. Look at the bios of Jack Scoville and myself. We've both been there a long time. We'd love to help you out.
That again was Bill Moore of Price Futures Group. We'll look at the numbers next.
Growers have spoken, and they're raving about Storin corn herbicide. We surveyed over 1,000 customers who've made the switch to Storin, and 99% said they'd recommend it to a friend. That's right, 99%. With a 9 out of 10 satisfaction rating, it's clear why Storin is the herbicide customers can count on. But don't just take our word for it. Ask your Syngenta retailer or visit StorinReviews.com to read testimonials from Storin users near you. Always read and follow label instructions.
At the close, March corn up half a cent at $4.31 3/4. March soybeans down 4 1/4 at $11.33 even. March soybean meal up $1.30 at $3.0920. March soybean oil down 46 cents at $57.08. Chicago wheat down 3 3/4 at $5.48 3/4. Kansas City hard red winter wheat down 11 1/2 at $5.42 1/2. Minneapolis spring wheat down 5 3/4 at $5.71 3/4. March oats up 1 3/4 at $3.10 3/4. On the Merc, February live cattle up 57 at $243.07. March feeders up 42 at $366.15. April lean hogs down 55 cents at $91.27. April pork cutout went unchanged at $103.40. And February class 3 milk down a penny at $15.05. That's been a check of the closing market prices. Thanks again to Bill Moore of Price Futures Group for joining us today here on the Iowa Agribusiness Radio Network, where Iowa Ag matters. I'm Riley Smith.